Why should any government be buying Bitcoin? Because it's the single greatest performing asset over the last decade, increasing in value 70% a year, year over year, every year.
Crypto's latest surge minting a new class of millionaires.
Crypto may finally be going mainstream, spurred...
Most people would still think that Bitcoin is just a gamble. But something big has changed in the world economic and geopolitical order. These new changes are reconstructing the rules of investing and portfolio allocation, where the old assets like bonds and real estate are losing their shine to Bitcoin. So this video will talk about these new developments around Bitcoin. Are they really strong enough to make Bitcoin a safe and rewarding asset of the future? Or are they too new and mostly noise? We'll also look at the risk and finally look at the strategy I am adopting in this new financial world order. See, the world is undergoing a substantial change. Every day you see social media full of tall claims. Some say that the dollar is finished. Some say that the Bitcoin is the new gold. But to separate the noise from the truth, we need to slow down and understand a few basic economic principles and see how exactly the world is changing. To understand the changing world order, we should know what strategic reserves are and their impact on assets like US bonds, gold, and Bitcoin. See, every nation and even large corporations have strategic reserves. So basically, these assets are not for daily use, they exist for survival. So when everything fails in a crisis situation, then reserves are what a country or a large corporation falls back on. And for decades, the US dollar itself has functioned as the reserve asset for most of the strategic reserves of different nations. Back in the 1990s and the early 2000s, the dollar made up more than 70% of the entire global official reserves. So today that share has slid to under 60%, in fact 57 to 58% according to a data from the IMF. So according to that report, the euro sits at roughly 20%, the Japanese yen about 6%, the British pound about 5%, and the Chinese yuan just above 2%. So the drop in the dollar is meaningful. It means, as we said, that other assets are taking its place in the global official reserve. So the world is diversifying. But the question is why? See, here's why. The dollar has not just been a currency or US currency, it has acted as a world's reserve currency. For decades, every other major international trade, be it in oil, commodities, electronics, anything, was priced in dollars. So that meant that countries needed a constant supply of dollar to keep trading internationally. But the question is, how did they get these dollars? So see, the system worked like this. The US as a net importer bought goods and services from the international market, sending dollars abroad. And countries like India and China, whichever country which sold goods and services to the US businesses or the USA, earned in dollars. So they used a part of the dollar to finance their operations and they saved or deposited the rest of the dollars in their central banks. Now the central banks of these countries bought US bonds, which were seen as safe and interest-bearing assets, while the US enjoyed an endless stream of financing. Now this cycle was based on trust. Trust that the US economy is stable, the US dollar is stable, and the US policies are stable. But when the trust erodes, this cycle weakens. And this is what is happening these days. And there have been a number of reasons for this weakening of trust on the US dollar and the US economy. So the biggest reason is that America's debt keeps rising, and the fear is simple. The fear is that if USA is not able to pay its debt by selling US bonds, it may resort to printing more dollars, which devalues the dollar. Then comes the weaponization of the dollar. Think about the US sanctions on Russia. Entire portions of its reserves were frozen overnight by the USA. That sent a chilling message to other nations that the dollar is not just a global currency, it is kind of a political tool that can be used by the USA, a tool that can be applied by the USA when you go against it. And above all, the US itself looks unstable. Government shutdowns, bitter political fights, and unpredictable policies under leaders like Mr. Donald Trump make the dollar look less like a bedrock and more like a risk. So with this erosion of trust, nations and even large corporations have started searching for alternatives to the dollar. And that search is reshaping the financial order we have taken for granted for decades. Countries are quietly looking for alternatives, and the evidence is clear. China has cut its US Treasury holdings to about $765 billion, the lowest since 2009. Japan still holds $1 trillion, but its leaders are openly calling US bonds as a bargaining tool in negotiations with the USA. So the trust-based loop that underpinned the dollar system for decades is showing cracks. Now for years, the answer for an alternative to the US dollar was simple, like the gold, yen, yuan, and even euros. But in a $337 trillion debt-ridden world, none of the alternatives look perfect. The euro is tied down by recurring debt crisis, the yen by decades of stagnation, and the Chinese yuan by capital controls. And here one asset stands apart, which is neutral, finite, and borderless, which is the Bitcoin. So that's why central banks, corporations, and even retail investors have started to treat Bitcoin not just as a gamble, but more as a potential store of wealth. And please note that this is not to say that the Bitcoin has dethroned the dollar. The US dollar is still the backbone of the global financial system, with 58% still of the global reserves held in US dollars. But the ascent of Bitcoin has begun. Quietly, it is moving step by step from speculation to strategy. Nations and large corporations have started treating Bitcoin as a store of wealth. So Bitcoin is a major part of the reserves. So take USA for example. Under the new strategic Bitcoin reserve plan, the USA is the biggest Bitcoin whale on the earth. As per a recent report that I checked, it sits at roughly 1,98,000 Bitcoins. Take China also for example, the same China that bans crypto trading. Irony alert is that it holds close to 1,90,000 of Bitcoins, similar to what USA has. And then we have countries like El Salvador, which are also mining Bitcoins in their countries. Let's talk about the corporations also. There are around 61 publicly listed companies which are non-crypto firms which have Bitcoin in their treasuries. And it's not just that the Bitcoin is only entering the sovereign and the corporate treasuries. There are other favorable conditions for Bitcoin taking place globally. So let's talk about the regulatory clarity on Bitcoins.
Last year, the Genius Act creates a clear and simple regulatory framework to establish and unleash the immense promise.
See, for years the Bitcoin lived in the gray zone, dismissed as risky because the rules were unclear. But that is changing fast. In the US, the Genius Act created a legal framework for digital assets, setting rules for stable coins, exchanges, and investor protection. The Clarity Act, which is working its way through the Congress, will bolster the digital asset ecosystem even further in the USA by putting guardrails around the ecosystem. See, these acts will promote institutional investment in digital assets even further. In Europe, the MiCA regulation built a licensing system that forces the crypto platforms to meet the same regulatory standards as traditional financial institutions like banks. So it's the first continent-wide law that forces the crypto platforms to get licensed, meet capital requirements, and protect consumers the same way that traditional financial institutions like banks and stockbrokers used to do. So if you are a European pension fund or asset manager, then MiCA means that you can now allocate some funds to Bitcoin through regulated and licensed platforms with oversight. I mean, that's a huge psychological shift. I can name other legal frameworks being developed in other countries like India, Singapore, Hong Kong, South Korea and all. And if you want, I can make a separate video out of it. But for the purpose of this video, here's the bigger point, that these laws have indirectly or directly changed the adoption of Bitcoin globally. They make it easier for institutions to invest in Bitcoin without worrying that they might break the law. And this legitimacy is what transforming Bitcoin from being a Wild West to becoming part of the mainstream finance. How can we miss ETFs also? Buying Bitcoin was difficult. But with the introduction of Bitcoin ETFs in the USA and elsewhere, buying Bitcoin is just as easy as buying another ETF or stock. However, I do not find ETFs the best way to buy the Bitcoins, but this is a separate discussion. However, this is a fact that ETFs have opened the floodgates for the most conservative pools of capital, including pension funds, insurance companies, asset managers, to allocate funds to Bitcoin. And billions of dollars have already flowed into Bitcoin and more is expected to come. So what's clear is this: Bitcoin and even stable coins are no longer fringe experiments. They're becoming more mainstream day by day. The biggest barriers, including usability, legality, and trust, are slowly fading. Governments are building rules. Governments and corporations are having Bitcoin as their treasury assets. And investors are treating Bitcoin as a more serious store of wealth. And thanks to the changing world order and weakening of trust in the US dollar caused by debt, sanctions, and an imminent overprinting of dollars, this shift is accelerated. I believe the more the global systems question the dollar's long-term stability, the more appealing an asset which is neutral and borderless like Bitcoin begins to look. This means one thing, that we are still in the early chapters of the Bitcoin's rise. But remember, I am not seeing Bitcoin as a short-term profit tool, but rather a long-term 5, 10 years or 15 years game. See, I don't panic over crashes, not even the one we saw in October, one of the biggest crashes of Bitcoin. Because my view is simple. Bitcoin is volatile, but it's programmed to be scarce. Only 21 million coins will ever exist of Bitcoins. That scarcity is what makes Bitcoin a deflationary asset in a world drowning in debt and money printing. But sure, it still carries risk, maybe even more than stocks and real estate, but the direction of history seems clear. Governments and institutions are quietly taking their positions. I would say Bitcoin's story is not ending, it's just the beginning. Thank you.